Hello traders, the title of the video is how to become an intelligent area wave trader. Alright, so this is not to insult traders, it's just a title, and we will be talking about how to become an intelligent area wave trader. No trader, okay, is a stupid trader, alright, but we want to talk about how one can become a more intelligent area wave trader, which means you don't want to go round, thinking that you are making profits, you are making a progress, all right? So sometimes people think that they are making a progress. So one day it's up, everybody's happy, and then the next day they are down. It's a roller coaster going in a cycle. That's what we want to avoid. How to become an intelligent area wave trader is about breaking the cycle of a roller coaster. 1 minute you are up, another minute you are down, another minute you are up. So you don't want that. You want to set, okay, a trend, okay, a progressive trend, okay, and improve your area wave analysis for good, all right? Without too much blah blah blah, the financial instrument that we are analyzing is one of my favorite stock, the Electronic Arts Incorporated. I've been analyzing this stock for some time because I like their game very much. Beautiful game, Electronic Arts. Oh, amazing. Do you do those? Do you play Electronic Art games? All right, check them out. Beautiful computer game on the. Oh, gorgeous. So now, so I start counting way right here. Before now you understand why I say apology to traders. I don't want to remove my lines. I leave them on my chart. Now you know why. Okay, that's the first way. For the first time, I'll color into pink. So from here, I don't want the video to be too long, so I'm going to go very fast. So this is the first wave here. All right, didn't break too much resistance. So looking at the characteristic or the signature of the bull, it's not very bullish. So we'll be putting a question mark on it. But this is the first wave, all right? Feel free to disagree. But as the first wave was underway, you can see that the smart money did not sell it very much. It pulled back to retest the moving at 14. That's the blue line on my chart here. So though that first wave did not break the resistance on the left hand side very much, they were very careful to push it down nicely to the moving at 14. One of the signs that the stock is likely to stay very, very bullish is that if they are not allowing it, or if they are not allowing that stock to go below the moving at 14, it means that they want to push it up. So they will place orders along the moving at 14. The computers can buy, and if the price comes near the moving at 14, buy, orders filled, come near moving at 14, buy, orders filled, and so on, buy, near moving at 14. Okay, the algorithm, the trading software can do that nicely. So let's go back to the main topic. First wave, second wave, not very deep, which is good sign that the third wave will be prolonged. All right. So if the second wave is not deep, is shallow, all right, it's the first sign that we're going to have a healthy third area wave. It's the first sign that there's a high chance we may have an extended third area wave. It doesn't mean that it's guaranteed that we're going to have the third area wave. So talking about an intelligent, how to become an intelligent area wave trader, it's about using the area wave theory as a tool. It's one thing you need to clear. Now, for some traders, this is not a big issue because they are not using it as a sign, they are not using it as a magic wand, but there are traders out there that are using the area wave like a science. And when you come across those traders, personally, I try to run away from those traders because they are dreaming the one plus one equal 2, and it does not exist in the financial market. So, talking about becoming an intelligent area wave trader, the first step is always to use the area wave like a tool. So why do you use the tool for? You use the tool to do something, isn't it? So you have a knife, you can cut your onion, you can chop your peppers, you can do all sorts of things with the knife, yes or no? So for the task ahead, you will apply the tool to achieve the task. So for the area wave, very, very important, use it as a tool. Why? What are you trying to achieve? You are trying to make money In the financial market, you are trying to improve your technical analysis. You are trying to improve your market timing. Use the Elliott wave as a tool. So what I'm saying here is that if the second wave is shallow, we are prepared. We will expect that the third wave will be extended, will be healthy. All right. So this is one thing you need to understand. All right. Now, as we see here, the third wave was underway. 1, 2, 3, 4, 5. I don't want to dwell on it. It has been extended. It's a complex third wave, which one should expect. All right. In fact, here this is a gorgeous setup because we have an inverted head and shoulder chart pattern here. Here it is. Normally, as a trade, some trader can point it out that normally, following our guideline, we'll say this is the first wave here. All right, but something has happened before. You can see that if I go back a bit, here it is, the price formed a double bottom. So here people will be saying first wave here. All right, we'll be saying first wave. Now the second wave has cancelled it. So now we go again, first wave, now second wave, pull back here. Now this is the third Elliott wave that has been prolonged, indicating to now another thing I want to point out to trader. You can see that when the price was in this consolidation move, there was an accumulation taking place. So the next thing that I want to say to traders who want to become more intelligent Elliott wave traders is that if you are using the Elliott wave as a tool, you want to use it in conjunction with the trading volume, right? Because if people are not buying, if there is no prior accumulation, because what we say to traders, the first Elliott wave is the signature of the bull, yes or no? So you want to understand that the signature of the bull in an uptrend and the signature of the bear in a downtrend. So very often, this one example here, you can see the pile of volume going on. There was this consolidation, this session, blah, 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 price from a double bottom. They were buying, okay? This is the accumulation period. Now here we are, the first wave. But it's a strange first wave. It did not break the resistance. Normally it should pop out carefully. But for one reason, it didn't pop out as it should. So we will put a question mark on it. So understand, when you are using the Elliott, because another thing that Elliott wave traders are making, they want to be Elliott wave traders and confine in that zone alone. And they don't want to know about market geometry. They don't want to know about stochastic. They don't want to know about divergence. They don't want to know about moving averages, crossover. They just want to be in that cage of Elliott wave. Don't be like that. So in order to become an intelligent Elliott wave trader, use the Elliott wave as a tool, combine it with other technical tools, most importantly, the trading volume. All right. So now we know that the third wave has been extended, which means it goes above the 161.8% Fibonacci extension level of the first wave. It's also a complex for third wave. Now, the third thing I want to say to traders that want to become a more intelligent Elliott wave traders is to have a mastery, should I speak like that? To have, to grasp the Elliott wave theory, to understand completely the Elliott wave theory. So if you miss the first step, which is the accumulation of the knowledge, all right, that's too bad, all right? You want to have a thorough understanding of the wave theory itself. Now, so the problem that those traders are facing, contrary to other Elliott wave traders that have the mastery of the Elliott wave theory, so there are one group of Elliott wave traders, they know the Elliott wave theory. They will challenge you. They will say, George, no, he didn't say that. He did say this. They understand the theory. But those traders fail when it comes to the practical application of the Elliott wave theory. But apart from that, there's another group. They are using the Elliott wave, but they don't grasp the Elliott wave theory, the basic rules, the Elliott wave basic rule. They don't grasp them. Like if the alternance between the second wave and the fourth wave. Very simple. So here we see that the second way is shallow. As an Elliott wave practitioner, should click straight away. As we see that it's turn, we see that the third way has been extended, and we see this like this. We will be saying to ourselves, well, if the second wave is swift, there's a high chance that the fourth wave will be prolonged. Here it is, it was prolonged. So this will allow you, if you a thorough mastery of the Elliott wave theory will help you to focus the market and to use the Elliott wave more efficiently. All right, so you cannot call yourself an intelligent Elliott wave trader if the first step you fail at the first step, which means you do not accumulate the knowledge. You could not duplicate the knowledge. That's bad enough. So if you are in that stage, you need to go back to the theory and learn more about the theory, all right, the alternance between the second wave and the fourth wave. Here it is, so because the second wave has been swift, talking about the time it took to be formed, is also shallow, all right. So if it's swift, talking about the time, we are likely to see the fourth wave prolonged. So the fourth wave will take longer time to be formed. Now, like as I told you at the beginning, to become more intelligent Elliott wave trader, we want to use the Elliott wave as a tool. So we need to move on. So in order to use the Elliott wave as a tool, one should always understand that the Elliott wave is a tool, it's not a science. That when we say that, when the Elliott wave theory stated that if the second wave is shallow, we are likely to see a deeper fourth wave. It's not guaranteed. So you need to be able to challenge the theory and say that what the theory is saying is not a science, it's not guarantee, it's a probability. When you start thinking that way, then you will start using the Elliott wave as a tool to achieve a goal. It's not a science, it's a guide, though the theory stated that if the second wave is shallow, we are likely to see a deeper fourth wave. Then you have to say to yourself, but it's not guaranteed the price can print a shallow fourth Elliott wave, even if the second wave is shallow. So what I'm trying to do here is to bring other traders that understand the Elliott wave theory thoroughly, but are using it as a science. So they may start using it as a tool. Then they will become more intelligent Elliott wave traders. On the other hand, traders who do not grasp the theory, I'm urging those traders to grab the theory. So because some traders are counting wave and they are not able to focus the market. Second wave, swift, time it took, we will expect the fourth wave to take longer time to be formed. Probably will be complex. Second wave is shallow. We'll expect a fourth wave to be shallow. You see, this one is deeper, isn't it? It's deeper. Fourth wave is deeper. In comparison, there's alternance. One is shallow, one is deep. If this one is deep, this one will be shallow. But it's not science. It's not always the case. All right, using it as a tool. So we see here the alternance between the second and the fourth wave. This is about the Elliott wave theory has been verified here. Talking about the Elliott wave theory becoming more intelligent Elliott wave trader is also about if you made the mistakes. All right. This is one thing I've noticed. A lot of Elliott wave traders are very proud traders. If you do not know, try to call 100 Elliott wave traders together, put them in one room, and you'll see that everybody, has their ego. All right, Elliott wave traders are very proud traders. All right. Now, talking about how to become an intelligent Elliott wave trader, we don't want to be too proud. It's nice to be proud of oneself. That gives you a bit of confidence, but we don't want to be too proud. Bringing us to the point that I want to make now, if you made a mistake, which we do, you count your way, you are wrong, you notice that you are wrong, we go back, we recount the way. Don't be too proud, don't be full of ego, and say that, that's it, I told you, that's the way it is, that's the way it should be. Just say, well, The wave count is dynamic. We made a mistake here. We did not take into consideration this particular pattern. Now it becomes clear that this is the pattern. Now we need to move on, because the area wave count is one step at a time. It's dynamic. So in order to become an intelligent area wave trader, if you should be able to admit your errors and rectify them. Most importantly, do not repeat the same mistake over and over. So somebody who is intelligent will not repeat the same mistake over and over. So you step on the nail, you know there is a nail there. Are you going to put your feet there again? No, you are an intelligent person. You will not put your feet there. Or if you are passing there, you will be more careful, yes or no? All right? So this is about admitting your error, rectifying them, and most importantly, learning from the past mistake in order to move on. This is what I was saying to you at the beginning of this video, that becoming an intelligent area wave trader is to break the cycle of roller coaster. So 1 minute you are out, you are going out, you are very enjoying yourself, you reach the peak. You are again coming down. You don't want that. You want to build, okay, a path that you follow. See how the price going now? Up, down. There will be down move, but for you, the move is up. Don't go in circle. Top, now. So this is about, okay, becoming more intelligent area wave trader. We also know that, talking about grasping thoroughly the area wave theory, that if the fourth wave is prolonged, talking about the time it took for the fourth wave to be completed, all right? This is about the theory, all right? We are likely to see what? The fifth wave extension. So the fourth wave, now it becomes clear for us. When we were here, we were thinking that this is the fourth wave, blah, blah, blah. And so on, we're going to have a flat correction. Here now we have is prolonged all the way here. This is our fourth wave there for electronic art. All right? So now that the fourth wave is complete, I'm going to move this vertical a bit here. You can see clearly. We have, okay, if the fourth wave is prolonged, talking about the time it took, according to the area wave theory, we are likely to see what? The fifth wave extension. We are now in the fifth area wave, which is also extended. But now, I told you something also at the beginning of this tutorial, that if you want to become an intelligent area wave trader, you don't want to cage yourself, all right, in the area wave environment alone. All right, you remember that? And I said to you that you should be able to combine the area wave with other technical tools. We were talking about combining area wave with Fibonacci, combining area wave with volumes, which is so important, because if people are not buying or selling, you don't know what's happening. So if you look carefully here, where our fourth area wave has ended, now you put your volume bar there. What can you see on this chart? There is a surge in trading volume. This will give you a bit of idea whether we're going to have a fifth wave extension. The volume bar will give you a bit of indication. You see, as I showed you at the beginning of the trend, there was accumulation taking place and then a breakout, right, before the trend. Those who were buying, okay, electronic art from 2000, when the stock market began a bullish trend, they were accumulating. It was going up and now couldn't start, and then finally come out of that consolidation. Volume, those people did not come out of the trade yet. They didn't. That's why the trend is still in place. Those are the first buyers. In a downtrend, we'll have the first sellers that will sell during the distribution. So now that we are applying the area wave, we want to apply it as an intelligent area wave trader. We don't want to be confined in one symbiose, all right, one section, a prison of area wave. Break that prison of area wave, shake yourself, all right, as the purest area wave trader. Start combining that area wave with market geometry, with Fibonacci, with volume bar, with divergences, all right, with trend line, all right, and so on and so on. So now that we know, because we are very proud traders, all right, 90 minutes so far, we're going to wrap it up soon. So we know that second wave is shallow, Fourth wave likely to be deep, not guaranteed. Second wave swift. Fourth wave likely to be extended, talking about the time it takes. Good. All right. According to the Elliott wave theory, if the fourth wave is prolonged, talking about it takes too long to form, is it prolonged? From mid 2015 up to the beginning of 2016, well, call it a prolonged. We're on the monthly chart. In comparison to the first one, it's prolonged, all right? Prolonged, we are likely to see, we can forecast that the fifth wave will be extended. So when we are talking about forecast, it doesn't mean that we are saying that this is exactly what is likely to take place. All we are saying is that we are expecting an extension. Until that time, it's just an expectation. But again, we want to combine so we can do other verifications. So the Elliott wave theory said that if the fourth wave is prolonged, there's a high chance that the fifth wave will be extended. Now we can check the volume bar and see what's going on. If people start coming out here, they probably come down. All right, those people stay put. All right, they stay put. And they didn't come out. If they start coming out, we see more surge into the volume, probably coming down, forming lower lows, lower high. They didn't. That's why we have higher lows, higher high here. They are still in place. They didn't come out yet. All right, now we see another surge into the volume here at the point where the fourth wave is completed. Are they buyers? Yes, they are, because the price breaks a bull, the prior high and final support. So we have a complex fifth wave underway. It looks to me. Going to color them into orange. At this point in time, this is about using the Elliott wave as a tool. With the information that we have, if we made a mistake, all right, we'll admit it and learn from it and move on. This is about becoming more intelligent Elliott wave trader. We want to grasp the theory, all right, very, very important, all right. But if you already grasp the theory, we don't want to use it as a science. We want to use it as a tool. So now we see the first minor wave of the fifth wave, second minor wave of the fifth wave, third minor wave of the fifth wave. Now, again, this is what we are talking about. You can see that the second minor wave or the fifth wave is shallow, is swift. We can expect the fourth minor wave or the fifth wave to be deeper or prolonged. Does it mean that it will definitely be like that? No, it doesn't. We'll use the Elliott wave as a tool. Price can change direction here. Another thing that I say to traders, if the third Elliott wave is strong, you see here, this one is strong. The third minor wave of the fifth wave, of that extended fifth wave, is strong, yes or no? Just take it from me. If a price action is quite strong, which I talk about today at the 2-4 Stock Trader YouTube channel, the video that I titled, that I recommend to traders to go and watch at 2-4 Stock Trader YouTube channel. First step, chart analysis using price structure like a pro. I was explaining to traders how to use the minimum price move is free, and I was telling them if the third move is strong, all right, we will expect a shallow retracement. So you can check it out. First step, chart analysis using price structure like a pro at 2-4 Stock Trader YouTube channel. So now because the third minor wave of the fifth wave that is being extended is very strong, how do we know that it's strong? Check that video that I talked about already, and I talk about it. I don't want this video to be too long. We will expect a shallow retracement. One of the rules that we use, if we want a shallow retracement, we'll expect a retracement to which level? The 38.2% Fibonacci retracement level. So where is it? That's the line going to color now into pink on this chart. So expectation of a shallow retracement, the level that we will watch is 38.2% Fibonacci retracement level of this move from here to here. So that fourth Elliott wave, fourth minor wave of the fifth wave that's been extended can not mass, all right, not mass. This is about the tool, no mass, can go to the level of $98.48. But as things stand now, the price changing direction is at the end of that fourth minor wave or the fifth wave. This is about the wave count. It's dynamic. It's one step at a time. At this point in time, while it's changing direction, will it continue to go up? We will see how things progresses. Here we'll see how, our fifth mana wave of the fifth wave will finish, right? So to summarize this video very fast to train it, you can see that we have applied the area wave theory. So in order to become an intelligent area wave trader, very, very important, grasp thoroughly the area wave theory. If you do not, that's not good start, okay? Very, very important. If you already grasp the area wave theory, as many other area wave traders have done, all right, you need to be a little bit smarter, all right? Don't use it as a sign because it's like using knife to cut yourself. Though the area wave principle, the area wave theory is there to help you to make better decisions. Now you are using it as a sign and it's not working. It's not because it's not working, it's because you are using it wrongly. So in order to become more intelligent area wave trader that already grasps the theory, you must start using it as a tool. What are you using it for? That's it. That's why you do care about it. You want to use it to achieve goals in the financial market. Is he achieving the goal? That's why you do care about. If not, try to use it, which means probably you are using it wrong. Try to use it in a better way, practically speaking. That's what we are talking about, practically speaking. Doesn't matter whether you have a master degree in an area way. Practically speaking, use it correctly. That's what we meant, okay? The next thing, in order to become a more intelligent area wave trader, one should always use the area wave theory in conjunction with other technical tools, like the volume bar, the candlestick pattern, the Fibonacci extension, the Fibonacci pattern, all right, the fractal, the predictive fractal, the divergences, and so on and so on. Don't be confined in the prison, so to speak, of the area wave theory. Break that prison away and be free from, all right, that restriction that you give yourself, and start combining the theory with other things. For instance, we can look for bullish divergence at the end of the second wave. All right, we can look for bearish divergence at the end of the fifth wave. So combine the area wave with other technical tools that traders are talking about. Be aware of it. Don't be just the purest area wave trader saying that I only use area wave. Yes, it's good to use area wave alone, but add more to it, and you become more talented trader because other traders are using those tools. If you don't know how they are using them, they can mess up your trade. All right? If you made a mistake, acknowledge the mistake. Don't be too proud. It's good to be proud. It gives you a bit of confidence, but don't be too proud. Admit error, rectify those errors, and learn from them. Don't repeat the same mistake over and over. Understand that the area wave theory is a theory. It helps traders to make decisions, to improve trading decisions. That's all. The expectation is not guaranteed. The forecast is not guaranteed. The price can print anything out. Pay attention to other traders, all right? Review past trade. So, like now, we have counted where we were here before. We were saying fifth way, blah, blah, blah. Now, here we are again, looking at the same financial. That's why I leave my line on the chart. They say, George, oh, it's too much line. Yeah, now you see it. You leave it there. You come back to it. You review past trade. Is there anything new that we didn't see before? Have you made a mistake? Yeah, we made a mistake. Yeah, go back to it and talk about it. Don't be afraid to admit error and review past wave count and see whether there is any change. All right? So those are the things that you need to pay attention to become a more intelligent area wave trader. All right? If you have any question or suggestion, this is your time to put in the comment section. And of course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another useless blah 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 blah, let us know by giving us the thumbs down. If you think that this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to become an intelligent area wave trader. Happy trading to you all and speak to you soon.